Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. What exactly is pricing power and does Celsius have it? In this video we will be doing a deep dive into Celsius and exploring the secret weapon behind the stock's success. Celsius, stock ticker symbol CELH, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Just before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. The channel is growing, which really means a lot. Thank you for your continued support. Now let's go ahead and jump in. Cue the logo. Let's review a little bit about Celsius's background. Celsius was founded in 2004 as the premier functional beverage company, targeting fitness enthusiasts and health-conscious consumers. Celsius has solidified their position in the functional beverage market after a successful initial public offering in 2010. Since then, the company has returned 404% or a 10% CAGR. To put that in perspective, let's look at a backtest comparison of investing $10,000 in Celsius versus Tesla and Nvidia, some of the fastest growing stocks in the market. In that comparison, $10,000 invested in Celsius would have grown to $5,090,714 or a 60% CAGR versus $1,032,370 or a 42% CAGR if invested in Tesla versus $2,446,298 or a 51% CAGR if invested in Nvidia. This demonstrates dominant performance for Celsius. Well, what is responsible for the outstanding share price performance, you might ask? While the company does have strong management and growing returns on invested capital, I believe Celsius stands above its peers in a major way. Pricing power. Motley Fool describes pricing power as the means by which a business can increase prices without losing more than a marginal percentage of its customers, if any. Generally, having pricing power also means a business can charge higher prices than competitors for similar products. We can measure pricing power by evaluating factors such as customer loyalty and brand strength. However, these factors are highly qualitative and are like numbers. So, to really understand how strong Celsius pricing power is, let's take a look at two important quantitative metrics: growing market share and growing gross margins. Now let's hop over to market share and take a look at Celsius market share. Expanding the dashboard, we can look under beverage and see that Celsius is categorized as a non-alcoholic beverage. Expanding the non-alcoholic beverage tab, we can see that Celsius has tiny market share but is growing really rapidly. Then in green hue, and the legend at the right shows us that Celsius is the fastest growing company here. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Celsius and see that the market share is just 0.36% out of the publicly traded beverage stocks currently in the market. But the real value is that the 5-year market share CAGR for Celsius is an astounding 91.05%. This means that Celsius market share has been doubling nearly every year. In this version of market share, we can also compare Celsius with specific companies. When we type in MNST, the ticker symbol for Monster Beverage, Celsius' closest public market competitor, we can see that Celsius holds an almost 16% share of those two companies' revenue. But even compared to Monster Beverage, which is also expanding market share, Celsius is growing market share much faster. The fact that they are taking market share from other beverage makers shows that they have pricing power. Customers are increasingly choosing to spend their hard-earned cash on Celsius products instead of other beverages. Now let's see how gross margin plays a role. Starting at 41.7% in 2019, gross margin has expanded to 48% in 2023. And this comes as Celsius is growing their market share and generating more and more revenue every year. Essentially, Celsius has been able to sell products and charge more. And yet more and more customers want the product. And if we again compare with Monster Beverage, who saw gross margin fall from 60% in 2019 to 53% in 2023. we can begin to more clearly understand just how strong Celsius is. This is pricing power. In summary, I think Celsius has demonstrated tremendous pricing power over the years, and the stock market has rewarded shareholders for noticing. Market share is growing, indicating customers love the product, and gross margin is expanding, showing us that Celsius is able to price their products at an ever-growing premium. I will continue to follow this company very closely for future opportunities. Many thanks for watching. What do you think about Celsius and their pricing power? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.